Thanks for joining our webinar on CFPB resources to help financial institutions serve older account holders. This webinar is brought to you by the CFPB's Office for Older Americans. And before we begin, I want to read a brief disclaimer. This presentation is being made by a Consumer Financial Protection Bureau representative on behalf of the Bureau. It does not constitute legal interpretation, guidance, or advice of the Consumer Financial Protection Bureau. Any opinions or views stated by the presenter are the presenter's own and may not represent the Bureau's views. The CFPB Office for Older Americans develops tools, initiatives, and resources to help protect older consumers from financial harm and help them make sound financial decisions as they age.
Now, let's take a look at CFPB's reports, recommendations, and advisories that are specifically designed to support financial institutions in their efforts to prevent and respond to elder financial exploitation. Our advisory and recommendations and report for financial institutions on preventing and responding to elder financial exploitation was released in 2016. This contains promising practices to enable financial institutions to prevent elder financial abuse and intervene when they recognize it. The key recommendations include to develop, implement, and maintain internal protocols and procedures for protecting account holders from elder financial exploitation, to train personnel regularly and frequently, and include warning signs that may signal elder financial exploitation, as well as action steps for prevention and response, to use technology to monitor for signs of financial abuse, and to review filtering criteria against individual members' patterns and explore additional risk factors that may be associated with financial abuse, to make timely reports to law enforcement and adult protective services, regardless of whether that is mandatory or voluntary under state or federal law, to file suspicious activity reports using the checkbox for elder financial exploitation, to comply with the Electronic Funds Transfer Act and Regulation E, to establish procedures so that customers and members can provide advance consent to sharing account information with a designated trusted third party if the financial institution believes the customer may be at risk of financial abuse. And you can order bulk print copies of this advisory and report and recommendations to share with your staff if you're interested, or you can also view it online and download the electronic version. We released an update to these recommendations in 2019. The update is focused on how financial institutions can best report suspected elder financial abuse to the appropriate authorities, such as APS and law enforcement. This update includes an overview of recent federal and state legislative changes, including charts of state statutes and a review of state laws that authorize transaction holds or delays in dispersing funds when elder financial exploitation is suspected, an overview of the Senior Safe Act. This update also encourages financial institutions to report all cases of suspected elder financial exploitation to relevant federal, state, and local authorities such as adult protective services and law enforcement. The update encourages an expedited response if adult protective services, law enforcement, or other government entities request documentation related to an active investigation of an elder financial abuse case, and encourages financial institutions to provide supporting documentation related to elder financial exploitation SARS to appropriate law enforcement or supervisory agencies. This update also highlights a few key findings from our 2019 report that analyzed elder financial exploitation SARS. So let's look a little more closely at that. As you may know, the Federal Bank Secrecy Act mandates that financial institutions report suspicious activity that might indicate some sort of financial criminal activity to FinCEN, the Financial Crimes Enforcement Network, which is part of the U.S. Department of the Treasury. The financial institutions that must file SARs include many different types, including banks, credit unions, money services businesses that do money transfers or wires, broker-dealers, and quite a few others. Access to SARs, and even knowledge of the existence of the SAR, is generally limited to law enforcement and to certain financial regulatory agencies. Law enforcement can use the SAR information to trigger new investigations, to support ongoing investigations, and to identify subjects who they may want to investigate further. In 2011, FinCEN put out an advisory noting that SARs are a valuable way for financial institutions to report elder financial exploitation. In that advisory, they talked about some basic red flags that could help financial institutions to spot elder financial abuse. Those signs include transactional and behavioral red flags. Transactional might be things like frequent large withdrawals or uncharacteristic attempts to wire large sums of money. Behavioral flags are things that a teller or someone on the front line might notice. For example, an older person comes into a bank with a caregiver and they look uncomfortable or their behavior seems out of character for them. In 2013, FinCEN introduced electronic filing of SARs. On that electronic form, they included a designated category or checkbox for elder financial exploitation. Once that checkbox for elder financial exploitation was being used, our Office for Older Americans conducted a report on the use of suspicious activity reports to report elder financial exploitation. To do this, we analyzed a limited number of structured data fields involving elder financial exploitation SARs. The timeframe for our analysis was from April 2013 to December 2017. We looked at about 185,000 SARs. The elder financial exploitation SARs were those where the filers selected the elder financial exploitation checkbox or selected the other category under the suspicious activity category and wrote some variation of the word elder in the open text field, such as elder abuse or elder financial abuse. In addition, we read full SAR transcripts of a representative sample of SARs to help us make findings about the patterns, issues, and dollar amounts involved. Throughout the project, we worked very closely with FinCEN staff. We found that elder financial exploitation SAR filings quadrupled from 2013 to 2017, from about 1,300 SARs a month in 2013 to 5,300 a month in 2017. This was a much greater growth than the overall growth rate for all SARs, which was only 40%. The incidents that were reported in the elder financial exploitation SARs, however, likely account for just a tiny fraction of all of the incidents of elder financial exploitation in a given year. A few key findings on monetary losses include that in SARs where the entire amount reported was a monetary loss, when the older adult was the one who lost the money, the average loss was about $34,000. And in 7% of these SARs, the loss exceeded $100,000. Losses were much greater when the older adult knew the suspect than when the suspect was a stranger. Our analysis of SARs indicates that elder financial exploitation is widespread and damaging, and that there is a need for strong interventions by financial institutions, law enforcement, social services, and policymakers. Please read our SARs report to get more information.
And if you'd like more information on the CFPB's Office for Older Americans, please visit consumerfinance.gov/olderamericans. If you'd like to join our email list, send an email to olderamericans@cfpb.gov indicating that you'd like to join the list. We send emails every so often with helpful resources. Thank you so much for joining our webinar, and we hope you have a great rest of your day.